Can you talk about capital loss carry forward, how to utilize it, why it's important, and maybe some things to think about when we have market volatility in the markets?
Sure. So capital losses, if someone doesn't understand how they work, but capital losses first offset capital gains. So short-term and long-term, you offset those. And if by chance the capital losses exceed your net capital gains, then you can deduct the capital loss of up to $3,000 per year. And but that can be against ordinary income, or it would be against ordinary income for the most part. So, it can be beneficial, but it is only $3,000 per year. So if you have a $100,000 loss on an investment, that's going to take you a long time to use up $3,000 per year, unless you have other capital gain income to offset. So you want to look at, and I'm sure you all are doing this at Hightower every day, you're looking at what are the investments for your client, and are there ones that are poorly performing? If they're poorly performing, should you get rid of them, and should you cut your losses now as opposed to letting them go to zero? Or, take some advantage of what is left in there and take some losses. Again, they can be used to offset other capital gain income that you may already have for the year. But at least consider what investments might be poorly performing. Also consider worthless investments. Maybe someone's got an investment in a partnership, not with Hightower, but outside of what you have invested for them. So they might want to do some sort of consideration. Is this investment worthless at this time? And if so, they should be deducting it in the year of the year in which it becomes worthless. Non-business losses can be deductible on a short term, as short-term capital losses, and business losses can create some ordinary offset ordinary income. So those are some things to consider there. So if you have, though, some capital losses to carry forward, some people might want to consider taking the capital losses this year if they know they might have a liquidity event and in a higher tax bracket next year. Again, you want to really still look at what the investment is and how it is performing, and that's where Hightower, I think, comes into play to really give someone advice as far as what they expect that investment to do. But knowing that you can carry them forward, and they carry forward indefinitely. So that's a really good piece of knowledge. The other thing to watch out for is wash sale rules. So sometimes people have a large amount of gain and they take a loss just to offset the gain, which is great. But you can't buy that stock back anytime within a 60-day period, before 30 days before, 30 days after the sale of that stock, or the loss won't be deductible. So I'm sure you guys talk to your clients all the time. They want to buy it right back, correct?
That is correct. Yeah. I mean, I definitely, in March and April of this year, there was a lot of tax loss harvesting going on. Fourth quarter of 2018, the same thing, where we never want to see a down market, but when we do have down markets, it gives opportunities to harvest some losses, to reallocate portfolios, or to simply generate a little bit of loss to kind of offset some gains that were that happened throughout the year.
Right, exactly. So it might not be capital gains, like we said. $3,000 can offset ordinary income, so you do get some benefit.
Right. Great.